Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the MarketSite studio of Max Cabasso, who's the managing director on Nasdaq's market intelligence desk. We're going to review some key levels to watch in the Nasdaq 100, as well as the types of data that are impacting Fed rate policy. Max, it's great to see you as always, and what a difference a week makes since you were on last, with the way September had ended and the way October had started for the markets. And then you look at trading activity today, and we're just seeing these 1%, 2%, 3%, 4% moves either within a session or from open to close.
Yeah, it's the bear market rallies end up being face ripping, but the question has been, is it now a bear market rally, or have we seen the bottom? Last time I was on, we were talking about it. We hadn't tested the lows that we had previously seen. Obviously, that just happened. So we tested those, ended up holding. A lot of talk of, was that the bottom? Did we get the double bottom? Now we can start to rally. I personally don't see that necessarily happening, but again, there's a lot of information coming out in the next few days that could give us a direction, kind of what we're expecting ahead.
And we can see on your first chart here, you have a very discernible channel. What are you looking at in terms of levels on the Nasdaq 100?
Yeah, so again, downside, I touched on it the previous time, and now again, that 11,000 mark to the downside, again, near those lows that we had just tested, and again, back in June. If we can hold those, again, if we test them again, that's going to be the key one to watch. Upside, I think it's again at that 12,000 to 12.5 range is probably the upside of that trend channel. We'll see if we can get through that. Again, we've seen, like you said, these 1%, 2%, 3% rallies where everybody kind of thinks there's, it's time to come off the sidelines, and then something comes out. Obviously tomorrow, we have more eco data coming out, so I think we're going to be in that range. That the double bottom at 11,000 and 12,000 to 12.5 upside is kind of where we're going to be watching the next week or two.
We know the Fed's dependent on inflation data, but let's take a look at jobs data. To your point, we have JOLTS, which shows the amount of people looking and how many jobs are available. And
Yep.
of course, non-farm payrolls, one of the most important pieces of jobs data.
Yeah, so the JOLTS on Monday, we saw that rally when the JOLTS data came in weaker than expected. The expectation was a little over 11,000 jobs, now where it was 10,000. So again, lighter than expectations. So the thought was, okay, look, the Fed is going to start to see these signals that things are starting to come down, the economy is starting to tighten. They might be able to pivot and take their foot off the gas in terms of the rate hikes. But I think tomorrow is the NFP, the non-farm payrolls coming out. Expectation survey is 250,000. I think based on what we see tomorrow, we'll get an indication of kind of where the next move is going to be. If that number comes in hotter than anticipated, plus 250, so for 270, 275, we're probably going to see markets sink. Just again, the Fed keep their foot on the gas. If that number comes in weaker, it's the bad news, good news sort of idea, right, where if it comes in weaker, it kind of gives more credence to that, hey, the Fed can start to take their foot off the gas. But I think that number is going to be a big one. And then obviously this time next week, we'll have CPI data, which will be out as well.
Right, that key inflation data. We'll talk about Fed rate hikes in this portion here, but it's interesting that bad news is being perceived as good news, but when you hear the different Fed speakers on the circuit, and I think there's like 20 of them last week and this week, their course has not changed. I have not heard anything different, that they are taking their foot off the brake. They are looking for very specific levels for inflation to get at. So if we look at your last chart here, indicating what Fed rate hike expectations are, what does the market think it's doing?
So it's still priced in. We're still looking at 75 basis points. There's 85% chance of 75 pip hike, and then essentially another 100% chance of 50 basis points in the final meeting at the end of the year. So still pricing in, another 125 basis points of hikes. I think that tomorrow it's going to be, we'll see that number move again. If that number is hotter, if we beat on payrolls, we're probably going to see that to go closer to a 100% chance of the 75 basis points and the 50, and then again CPI next week. Expectations are that inflation is going to start to come down. We see used car prices coming down. Container rates for shipping are starting to come down. But again, that the services sector is really what's going to be stickier, and labor is also more. It's stickier. So I don't see them pivoting anytime soon. I think they're going to want to see that consistent and not one single data point. Even though that's kind of what we're trading on right now. You see the market move on single data points, seemingly every week or every day. But I think the Fed, as you've said, they keep noting, they're looking at consistency and numbers to come down and stay down. They're not going to take their foot off until they see that happening. So I think we're in store for another, 75 and then 50 is at least what the market's pricing it.
Right, and I would agree with you because one data point is not an economy make, right? I think the challenge is with the data that the Fed's dependent on is that it's always backward looking.
Yep.
And what might look like, October 30th is very different than what we see today, but they're still looking at September numbers. And I don't know about you, I know car prices are coming down and the supply chain, the bottleneck has opened up a bit, but even if you look at grocery shopping, I feel like it just continues to get more expensive.
Yeah, food is still going up, and we seem to be talking about it every week. Energy.
Right, but look at what happened with energy this
Right.
week with OPEC.
OPEC, they said they're going to cut, and Brent is back above 90, expected probably going to hit 100 again. Gas prices, I was just out in the West, and it's still way higher than we were. It's over $4.50 a gallon for a gallon of gas. So there's diesel shortages. So again, until that energy component gets figured out, I know that's part of the non-core, but until that gets figured out, we're really not going to see the impacts of deflation essentially. So I think I agree. It's real world. They might have certain numbers, but real world, it seems like prices are still going up, and you're not really seeing that backing off of food prices, especially like you said.
Right. All right, Max. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.